Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Last week we had a CPI print. It was higher than expected, and we got a kind of bullish move based on that news, and it should have been bearish. So why did that happen? Well, we're going to discuss that plus much more, so make sure you stay tuned until the end. If you're depositing and withdrawing crypto from a wallet, Bitget has no KYC. Also, something that is fantastic, the fees are half that of Binance. If you're an active trader like I am, this is huge. Cannot even stress how important that is for intraday traders. They have rewards and coupons for up to $4,000, but the most amazing thing that I've seen while backtesting the charts, no scam wicks. If you compare Bitget with that of Binance or Kraken or any other exchange for that matter, you're going to see what I mean. Just look at this ugly thing. 20% move to the downside. And on Bitget, 3.9%. Same candle. Another thing I love is they have the inverse swap contract, so you can trade Bitcoin with Bitcoin. They also have copy trading. Just follow your favorite trader, and maybe soon you'll be able to follow me. Lastly, if you're learning how to trade, they have a demo account for both margin and swap futures. So if you're going to be a trader, you might as well be using the best exchange for active traders. Use the link down in the description and be sure to use referral code XTSC. That's X-Ray Tango Sierra Charlie. Come join me and others and move over to Bitget. Out of the seemingly never-ending sponsorship deals I get, I did a bit of research and decided to partner with them. You should too. New sponsor. Show them some love. Click the link. Click the link. Inflation was higher, up 9.1. That is the highest that we have seen in many years. It was higher than the 8.8 expected and significantly higher than last month's print of 8.6. So why did we get a 9.1 print on the news, and why did the market react bullishly? Well, I believe it's because it's simple. The market's always looking forward, and here on this channel, we are always trying to do the same. Last week, I told you we were looking for bullish positions, and that ended up working out beautifully as we are up nicely on both of those trades. With the market reacting the way it did, I am looking for a dollar pullback. So here on the dollar weekly chart, you can see that this thing has been absolutely bullish as can be, even though we have bearish divergence still on the chart as we are making fresh highs on the price action, but not so much on the RSI. We were kind of looking for this thing to pull back this week, but we had another strong, magnificent week to the upside. I told everybody last week that if you take out the previous week's high, then stop looking for shorts on the dollar until it finds resistance and starts to roll over, because if you do take out that high, then what you have is bullish continuation and not just a stop run. So now that we have gotten that push higher, and we did see a little bit of a pullback on Friday, I am going to be looking for the pullback to continue on the dollar, and if that happens, then obviously Bitcoin should hopefully have a nice bullish reaction. The price that I will be watching for on the dollar for potential short side entries moving on into next week will obviously be 108 spot 637. I have already positioned myself short on the USD JPY, expecting that move. And as you can see here, this is my short side entry at 139 spot 043. I am looking for this to continue. We did not get a very big down day on Friday. So if price comes back up to daily resistance, I will look to add to that short position, as I did take profits on the move lower yesterday. So if we do get a pushback up into resistance here, looking for the dollar to roll over, I can trade that by looking to short the biggest mover being the USD JPY. So big strong move to the upside. Let's see if we can get that pullback, as we do have other indicators suggesting this. All right, so here is wheat. You can see that when we started to have the risk off environment, wheat started to expand to the upside parabolically. Now, we have been trading up at these levels for a while, but in the last several weeks, you can see that wheat has been pulling back almost as viciously as it started going up. This is good news. Even though inflation is going higher, the market is treating it as if though it might have topped out. So the market is forward looking, selling off those wheat prices. Here's copper, same scenario. Copper going up in a high inflationary environment. Now you can see pulling back and pulling back hard. We haven't got the risk markets to act in the way we want them to just yet, so it does appear that they are lagging other indicators. And finally, US oil, another asset that rips to the upside in the eyes of high inflation, starting to pull back, giving a fantastic short trade right there at 113.72, and you are down into weekly support. So basically what I'm trying to say is this: if these indicators are showing us that the market participants have already been positioning themselves for potential pullback in these things with higher inflation, then that can only lead us to believe that this month's inflation print could possibly be the top. All right, so coming back over here to Bitcoin, we did try to position ourselves for the July low. It is the 16th of July as of right now, and we were coming down close to that low. If we go over here to the monthly time frame, you're going to see that we did come all the way down to the monthly open. And remember, I was looking for this low to be the low of July, even though we haven't gotten that bullish expansion yet. I do think we still might coming into the latter part of the month. So going back over here to the daily, you're going to see that we did come down, this white line right here being July's open. We did get underneath that, but we did not take out July's low. That is July's low right there. This bullish candle, this wick low, that is going to be your low. And now we're moving away. All right, so that's good. We're positioned for that. Let's see if this thing continues to go higher. Now I am going to basically show you a few things here. Let's go here and look at volatility. All right, coming over here to the VIX, you can see that this thing has been pulling back the last 5 weeks. You've been bearish, or not bearish, but pulling back. We did get a volatility expansion, which suggested that we were going to see more downside. And though this indicator or this asset has not indicated that we have seen a bear market low, this market cycle has been a lot different than previous market cycles due to inflation. We didn't see the Japanese yen or the Swiss franc get strong in a risk-off environment. Technically, that could indicate that we're not going to see a blow-off top on this either, marking a bear market low. The market has been acting differently, and we try to basically be on the right side of the market on this channel, so we do take into account all of these things. With the VIX pulling back here again at support once again, maybe we could see this be good in the long term. Having that compression will basically eventually we'll get that short squeeze that we're looking for, that expansion to the upside, because we do know people are shorting the market. If I pull over here, this is going to be the short open interest put to call ratio. So this basically bottomed out at the top. That's when you started to see an increase in puts. So June the 9th is right there. That's when we started to see that increase in puts. So basically people starting to buy puts here because they're doing the same thing that we're doing. We are trading the range. We're buying support. We're selling resistance. So that is normal when you start to see puts increase like that at the top. That does mark a potential turning spot in the market. We got that turning spot in the market and we traded all the way back down to weekly support. This day is when we got the news. So you did get a stab lower, stopping out the previous day and getting above the previous day, creating a bullish engulfing and giving us an outstanding opportunity to get long for you guys that are looking to take short positions based on where you are currently. I don't think it's a bad idea. You are into weekly resistance, and if the range is going to continue, then this could be a good spot for it to do so. Weekly res, you got two of them here. If I go back over to the weekly time frame, I'm going to show you this is the main weekly resistance I'm keeping my eye on, but last week's close also seems to be holding price. Well, at least today anyways. It held price yesterday, closed below. Today, got a lower push, but you're right back up there again. So I want to see it break out and continue to the upside because I'm positioned long. But if you are indeed looking for shorts, then this is pretty close to an area where you want to do so. If I pull up the Fibonacci retracement tool here and tag from swing high to swing low, you can see that you are close to the 618 618 retracement. All right, so if this is going to be a measured move to the downside, then the 618 retracement is up there near the highest weekly resistance. Could be a good area to look for short entries. My bias is not short, all right, and my bias is bullish, so I'm not going to exit my bullish positions in order to take a new short position. But if you want to get short, I don't mind it at all. It's up to you. Just make sure you manage your risk and keep an eye on that weekly resistance. Start closing dailies above it, then looking for short position might not be such a good idea. Now, if we do get that play, if this ends up being the play, looking for a measured move, what you're looking for is something similar to this right here. This is your pullback. So next, what you want to see is an expansion to the downside, and it would mark a pretty nice short trade down there if you were targeting that swing low down here. Now, obviously, if this plays out, my bullish positions will be stopped out, and that's okay. I will look to add new bullish positions in the event that this short happens and we take out that swing low. That would be, in my opinion, a liquidation event, and if we do take out that swing low, I am not looking for downside continuation. I would be looking for price to get back above that and then start another bullish expansion, because we know that the markets are constantly in search for liquidity, and we also know that liquidity sets at swing highs and swing lows, and there are two really good liquidity spots to look. So being on the right side of the market is what we try to do on this channel. If you are new, make sure you hit that like button. Also, think about subscribing, as I do put out content pretty often on this channel, and we do put out actionable intelligence, meaning the things that I discuss in these videos are things that you can absolutely act on. All right, thank you guys so much for being here. Make sure you guys trade safe, make sure you trade smart, and as always, happy trading, everybody.